Okay, quick Friday morning radar update, market update. So we followed the US down. Some Fed chatter yesterday. We're just basically trading sideways in Europe at the moment. Obviously, DAX has been on a ripping run, more sort of volatile sort of trading market, the DAX. Let's just go through these markets. I'll jump through the US first. Transport's just still trading sideways. Do you want me to put, that's your monthly. There's your weekly. Just still trading sideways in a base. Dow, industrials. First visit down to mean trend in the whole run. We're looking out for the first retrace in this US market, and we're looking for this divergence to come together between UK and US, and we're also with all time frames being bullish, we're looking at this pullback to be an extremely interesting pullback for anyone who rides trends. The first pullback in a bull market, well, happy days. I will take that trade all day long. No crystal ball. But the UK markets, they're rising on all time frames. Then they're not punching higher and trending yet. There is no trend in the UK markets yet, but the stocks are, the growth stocks especially, are acting fine. So we're looking for this next slingshot from this pullback. I am anyway, personally. One trick pony, rinse and repeat. Something I always point out, if you want to sort of get an in-depth sort of view on this, go into ShareScope tutorials and basically have a look at the links in my Twitter account. Go and have a look in the ShareScope tutorials, and you'll get how we look at the markets and how we look at pullbacks and what we look for. And back to the S&P, there's a tutorial. If you go back to sort of early 22, you will sort of get the bear market sort of view on what we were looking for back then. And this is based out, broken out, got a pullback like this, one of these long drawn out channeling pullbacks. We've gone on a ripping run, back to mean trend. Will it get there today? Where's it going to gap to today? I don't know. But that will be the first port of call. Time or price, consolidation, time, sideways, it could be doing this. Or price, it could be doing this. So time or price, markets need to consolidate, and we know which markets will just kind of go into. I'll just show you the example that the Nasdaq's gone nowhere in weeks. It's been going the time route. It certainly doesn't mean that it can't be trading down here at the breakout level in the future. No, but we just take it one day at a time at the right hand edge. We don't predict. We just know that this market has been trending for a long time. We can see that the Nasdaq has been consolidating through time. Personally, I always bring this across in my group. I'd like to see a couple of bad days. Just real. You get there faster in the Nasdaq, especially. A couple of bad days just to shake up the market. In the UK small caps today, you can see that those long-term investments are now slippery bars of soap, and people are puking their trades everywhere. You've got to zoom out and just stay in your time frame, stay in your lane. You should be micromanaging long-term investments on daily charts, should you? Daily intraday, on an intraday news-led move. So yeah, know your time frame. All this for someone who's sort of been in markets and navigates the markets, you will have some inbuilt rules for the way you manage your trades. I put mine in trend mode. I like to trend follow my my winners, and my losers all have an exit attached to them when I load the trade. So, I will trail a stop, and I won't get any anxiety over any volatility. I actually welcome volatility and pullbacks. Have a look at W7L today. That pullback in W7L. It's the first visit to mean trend it's had in a while, and I welcome this because it basically, all the weak holders get washed out. All the people who bought over the last few weeks and they bought without, we have an area where we do business. We if you've read William O'Neill, you'll know the 5% rule. Pullbacks and breakouts, never, mean trend, the 5% rule. You'll have a huge cushion to deal with pullbacks like this. But if you're buying because Edward Treetop on Twitter has told you it's a great stock, you won't have any of that attached to your trade. So it might, that kind of investing is always going to be emotional, isn't it? And it's though you think you're a long-term investor, you'll end up puking your trades every correction. So you've got to back into your risk, and timing doesn't need to be impeccable. You're positioning rather than timing. Positioning at breakout levels and positioning at pullback levels. But if you get emotional, go and have a reset and just ask yourself why you're emotional. You might be trading too big. You might have no position sizing whatsoever. You might have no entry sort of criteria, and you might even just be buying on a newspaper tip, which would be probably the worst way to approach the markets. Well, definitely. So let's just finish going through these markets, get back off my soapbox. Very normal action, just going sideways at the moment in the Nasdaq. Pullback would be faster and better. The Russell, it's just bumping through those highs there. It's not all-time highs, it's 52-week highs, and it's just pulling in from there. The DAX broke out. The DAX broke out and it went the time route, and it built a base, and it's broke out and got in a straight line for a double measure of that base, and coming back into here, it wouldn't be a surprise. Moving on. And you've got to remember, stock selection in the mix. You've got to be trading stocks probably more volatile than the market, but walk to the beat of their own drum. That's where I want to be. So I don't mind, volatile pullbacks, because the stocks move twice. I'm not trading. I'd be trading the market if I couldn't beat the market, is basically what I'm trying to say there. You want to be able to ride stocks what can trend, and that's how you get paid at the end of the day, isn't it? So FTSE 100 just bumbling around at the highs here, 52-week highs, and we'll say 250. It's bumped through this base. We was kind of hoping it went sideways for a bit longer, actually, while the US coiled back in. Obviously, prediction, don't trade on that. UK small caps, fully listed small caps, the strongest market at the moment. So, hardly blinking. So yeah, we'll see where it goes. I'll just quickly have a look at a couple more markets while I'm at it. I don't want to drag this out too far. TLT's kind of, we're wanting the base, but we've got the channeling action here. Hopefully it stays above the lows and it turns into a base. Very, very nice area to actually start to respect up here. Should we even look at Bitcoin? We've put it in detail, haven't we? This was the first this was the breakout. This was the first retrace. We had this baseline in. This is why we say, you don't want to be buying the low, trying to buy the lows. You want to buy the highs, and Bitcoin made the big straight line trending move after it broke through the highs here, 52-week highs. 6-month highs was down here. And I'll just quickly jump onto oil's putting pressure on stocks, isn't it? And we've got this big channel on oil here. It's going right back up to the 23 highs. And let's go down to the gold stocks here. I mean, gold, extremely strong, isn't it? You know, gold stocks have been good for us recently. So yeah, you know, that's a quick run through the markets from my point of view at Trading Basis. If you like these videos, obviously hit the like button and subscribe. I will try and be a little bit more regular with them, but it's been a good time in the markets for stocks, and yeah, I'll leave it there.